So how easy is it to access the cash value inside a whole life insurance policy? The answer to the question is, it's very easy. However, we see this question come up quite a bit with individuals who are new to whole life insurance. They're trying to understand the cash value, and they're used to putting money in the bank because it's something they understand. They've done it their whole lives. It's very easy to access their cash quickly, and having a certain dollar amount in cash gives them peace of mind, whether it's an emergency fund amount or just a dollar amount that they've been comfortable with once they've seen that balance in there. For some people, it's $5,000 or $10,000. For some people, it's $250,000 or $300,000. They just like to see a certain dollar amount sitting in cash. However, once they see their bank account balance get higher than whatever that dollar amount is, again, the dollar amount for them, that's typically when they begin to look for somewhere to put their money. And when I look at the cash value benefits of a whole life insurance policy, a safe, liquid, and tax-free area to position cash, it can be very attractive. The follow-up question naturally is, how easy can I access the money? Because I'm used to being able to access the money very quickly when it's just sitting in cash. So we're going to go through a few commonly asked questions, and then I'll go through 3 steps I would take when it comes to accessing the cash value in a whole life insurance policy. So let's hit on some common questions first. The first question is, how fast can I access the cash value? And the answer is, on average, it takes 2 to 5 business days. Sometimes it's 1 to 2 business days, but it does depend on the company and how you request that loan. Are you requesting it to be mailed to you via check? That's going to take closer to 5 business days, maybe even a little bit longer. If you're doing it direct deposit, I'd say somewhere between 2 to 5 business days. On average, what we've seen with people we work with is 2 to 3 business days on average. The last policy loan I personally requested took 2 business days. The one before that took 3 or 4 business days. But it's typically within 2 to 5 business days. That's the average time frame. So not as quick as getting money that's just sitting in cash, right? I've got a debit card. It's very easy to access that. With a policy loan, 2 to 5 business days on average. How do I actually get my money? So if you've got money in cash value, how do you get to it? Well, there are several ways. 1, you can call your agent that you work with. 2, you can call the insurance company directly. They may refer you to your agent. Or 3, you can use your online portal or mobile app if the insurance company that you have a policy with has one. Most life insurance companies do, especially your 4 major mutual companies, but that is typically the easiest way to actually get your money. So, for example, if you have an online account or a mobile app and you request a policy loan, you can request it that way, and it's typically sent via ACH direct deposit. Again, that'll take between 2 to 5 business days. So very easy to access your money. You can track the cash values every day. It's very, very convenient in that respect. Here we've got withdraw and then policy loan. So these are the 2 ways that you can actually get to your cash value. Let me hit on withdrawals first. A withdrawal is just like withdrawing money from a bank account. Once you withdraw it, it's no longer earning interest. However, with a life insurance policy, there are some things to be aware of here. So with withdrawals, typically we cannot take them within the first 7 years of a policy. If we do, we'll find that it can trigger a modified endowment contract, which can result in taxation on your cash value, and we typically do not want that at all. Secondly, if we are withdrawing it past year 7, what we want to be aware of is if we withdraw anything more than what we paid in, this is referred to as our cost basis. This is the total dollar amount you've paid in since day 1. If you withdraw more than that cost basis, the gains will be taxable to you as ordinary income. So when it comes to withdrawals, we can take them, which is very, very simple. I just withdraw whatever my cash value is or a portion of it. However, I want to make sure I don't trigger a taxable event. And it's usually something that your agent can let you know, and some insurance companies will even have prompts or notices on their online portal that will let you know, hey, if you proceed with this transaction that you are inquiring about, you may trigger a taxable event, or you will trigger a taxable event. So you've got warning messages, and there's several things you can do to prevent it or even reverse a taxable event if it occurs by accident. But one way to get money out is through a withdrawal, but there are some things I want to be aware of. And then second is through a policy loan. So with a policy loan, when you hear this word, take out policy, just a loan, what do you think of? Payments and interest. That's typically what we think of. If I have a policy loan, do I have to pay it back? The answer is no. Usually, there are some cases where I might have to repay the loan to prevent it from lapsing, but I'm not required to make loan payments. And often you'll see individuals in retirement who are taking loans in order to access their cash value on a tax-free basis. They're not paying their loans back at all, and they're usually not even paying the loan interest. So I say that to demonstrate the fact that you can get money out through a policy loan and not pay anything back. How it impacts your policy is mainly through the death benefit. You'll see a lower death benefit paid to your beneficiaries, income tax-free. It will impact the cash value as well. However, you can access policy loans without repaying them. So, questions that come up. If I'm going to take policy loans, do I have to pay the loan interest? Do I have to? No, you do not. And then second, do I have to pay the loan principal? Do I have to? No, you do not. There is a case where you would be required to pay the loan interest. It would be if you have the maximum loan outstanding and you're not paying any premiums, any PUAs into the policy, and the loan interest exceeds the earnings on the policy. If that happens, that would be a case where we might have to pay the loan interest. Otherwise, the policy will lapse. If it lapses, that could result in a taxable event. It depends if the total cash value has grown to a larger amount than what you've paid in. But my point is if you have maximum loans outstanding, you're not paying anything at all into the policy, and the loan interest is higher than the earnings on the policy, that is a case where you would likely have to pay the loan interest. Do I have to pay the principal? No. So here's some steps I would take when it comes to accessing the cash value or really looking at accessing the cash value. Number one is see what a policy looks like if you just pay money in and let it sit and grow. I always like to start here because I want to make sure that the cash value growth is maximized. Where people often have buyer's remorse with a whole life insurance policy where cash value was the goal, rarely has to do with accessing the cash value or understanding how loans work. Where people have buyer's remorse is when they get a policy and then afterwards they find out that their policy could have been set up better, where they could have had more cash value from start to finish. So what I always like to look at first is the policy and making sure that the cash value is truly maximized right out of the gates. Second, look at policy loans without payments. So if you're interested in putting money in a whole life insurance policy for the cash value, and you want to be able to access that cash value, but you're not into the idea of repaying loans, what I would do is request that policy that is maximized for growth, request an illustration to see exactly what it looks like if you take out loans and make no payments. And when I say no payments, I mean no payments toward the loan interest and no payments toward the loan principal. What does that look like? What is the impact on the policy? Does it continue to grow? It should, provided we set it up properly and such. However, I still want to see that up front. You'll also see, if you take maximum loans, that's where you could run into a case where you would have to make interest payments at a minimum. So it allows me to see an actual visual of what that policy looks like when I don't pay anything back. And then third, what does it look like if I do make payments, whether it's interest-only payments or I repay the loan partially or in full? That way I can see the benefit there. A lot of times people will do that because remember, with the life insurance policy, if I've got $100,000 in cash value, we'll make this very simple, and you elect to take a policy loan for $70,000, what happens here? Well, you've got loan interest on the $70K that is due to who? The insurance company. If you don't pay it, the policy is going to take a loan against the cash value, and you'll see your death benefit drop as well by the amount of the loan interest every year. However, what offsets that is the fact that even though you have this $70,000 outstanding, you're still earning dividends and interest on the full $100,000. So even though you've leveraged your money, you're still receiving compounding on the full 100K. So where people are attracted to taking loans and repaying them back is because if I repay that 70K plus whatever the interest is over time, what happens is now I see my cash value restored to what it would have been as if I never touched it in the first place, if it just kept on compounding. Maybe over that period of time, it would have grown to 150K. So I pay it back and I see it worth the $150,000. My death benefit would be restored as well. But that's something you can decide to do after a policy has been established. Maybe you've had it for years and you didn't even know you could do that. You're like, I didn't know it worked like that. I've got this cash value I've built up. Can I see what it would look like? Maybe it's a smaller policy, but I've got enough in there where I can purchase a car with it. What's it look like if I buy that car? Make interest-only payments to the insurance company instead of the car institution, and then I begin to repay that policy loan. All of a sudden, my cash value is restored, and I'm driving around my ride too. Of course, we always want to account for the loan interest we're paying to the insurance company. So I hope this made sense as far as how easy it is to access the cash value in a whole life insurance policy. In my opinion, it's very easy to access the cash value. It's really just answering some questions to provide awareness around what happens if I take a loan and don't pay it back. That's the big thing. So I hope this helps. If it did, please hit the like button, subscribe for more. Let us know if you have any questions in the comments below. And as always, I hope this helps. Thanks so much. Hey guys, Steve here with IBC Global. Thank you so much for watching the video. If you're interested in a whole life insurance policy and you'd like to work with our company in setting it up, please visit our website, ibcglobalinc.com. We would love to work with you. If you have any questions, please leave them in the comments below. And as always, I hope this helps.